Morning, everybody. Welcome to the latest instalment of Talking Ball. It's the 16th of April. We're Sigma Centre Talking Ball. Again, I'm Joe Neighbour, joined by Steve O'Hare. How you doing, Steve?
All good, thanks, mate. Yeah, not
Good.
too bad. You're a bit
Excellent.
happier now that Arsenal are through to the semi-finals as well.
Semi-finals, yes. Destroyed Slavia Prague yesterday, which was nice. And on to the semis. So we'll see how that goes. At least there's something to stay interested about this season because there's certainly nothing going on in the league for us. So
No.
that is nice. Okay, on to latest news. So COVID is ripping through Europe still at the moment. France passed an ominous milestone yesterday as it surpassed 100,000 deaths from COVID-19, and the German healthcare system is being stretched to the brink, with many hospitals overwhelmed with the rising case numbers, indicating tougher days to come. Obviously, in the UK, we're in the process of reopening, and senior medics have urged caution and said that social distancing rules must be followed, given the dangerous wave of infections that are being seen across neighbouring European countries. Also in Italy, we saw that the country's debt is set to exceed the previous record amassed in the wake of the First World War, as the costs of COVID really rack up. So again, that's not particularly healthy for the economy, but you wouldn't know looking at the equity indices that there was anything wrong. Looking at what's going on the geopolitical front with the US and Russia, took a little bit of a turn yesterday as the Biden administration imposed a raft of sanctions in retaliation for alleged misconduct related to the efforts to disrupt the US election and also solar wind hacks. Russia broadly shrugged it off, saying they were ready to retaliate, but also saying they're open to a summit with the US. And they're trying to work out a stable and predictable relationship. That's certainly what Biden is looking for. On the earnings front in the US, we got a bit of an insight into what's going on there. We had the banks pretty much all beating estimates, but there was a notable decrease in the amount of lending that's going on. And obviously, that's a big part of income for the banks. As a result of the pandemic, a lot of people have been using excess cash to pay down debts. So potentially a bit of a dent to earnings for the banks going forward if that theme continues. On the cryptocurrency front, Coinbase IPO, obviously we've seen that come to the market, but it's struggling to sort of settle around a valuation. It's some way off the $112 billion that it hit on its debut, which is obviously a bit of a blow to retail investors. And I imagine there would have been quite a few retail investors taking a punt on the Coinbase IPO, given the amount of hype that it had. So it's currently trading at $322. Looking at the price went to a high of 430 and it settled yesterday at 322, so over $100 off of its high. Okay, anything else you've seen on the news front, Steve, before we dive into some charts?
No, not a lot. No.
Cool. Do you want to?
Charts. There's loads of charts, mate.
There's always charts. Do you want
Plenty of
to
those.
take it away for us?
Yeah. Okay.
Gold was interesting yesterday. I'm sure you'll come
Yeah,
on to that
gold
shortly.
was. Yeah, it's. I'll jump onto that just after cover oil. Oil continued the move higher as we expected. It's broken this right shoulder, so it's negated the head and shoulders formation that we previously highlighted, and almost you could say it's almost a little bit of a double bottom here. So we expect the rally higher to extend back towards the 8th of March high at 67.80. So that's got good momentum. The MACD showing that positive momentum has returned, and all looking pretty healthy from that perspective. Yes, gold, for me, very interesting. It's a formation I've been talking about for a while now, this double bottom formation, and we were looking for this a clear break and close on the daily chart above 1756, and we got it yesterday. So for me, this is a real sort of like line in the sand which has been crossed, and I expect to see, and we can see even the momentum here picking up and pushing through. So this is positive for the market as well. On a weekly basis, this is the weekly candle, we can see the reaction from this double low here, the double bottom, and we can see a potential crossover on the weekly chart on the MACD. Let's get the Ichimoku cloud up there, see what resistance we're facing. It's a big chunk of resistance. This all goes back to where price action consolidated after making the all-time high back on the week of 3rd of August. That got up to $2,075. Now we've got a bit of a slog to get through this resistance, but and we're still in this downward channel, so we'll come up across different resistance levels over the coming days and weeks. But for me, on a short-term basis, I'd be buying dips in gold now around about the 1755 level. 1720 for me is the risk level. That's where I would contemplate maybe this pattern has failed. So all the way, but it has to make its way through. Obviously, it'll come down, retest this previous channel, but here 1720 to 1723 is the key support for me, and this big cloud. So yeah, onwards and upwards for gold. Dollar indexes pretty much stayed the same yesterday. Hanging about its sort of like more recent lows in this downward channel. So the fact that gold has pushed higher is even more positive. It really felt like it, you know, when we saw dollar strengthening over the past few weeks, gold seemed to hold on. So there was definitely something going on there. It feels really good. I like the shiny stuff. Going on to indices, what have we got there? New highs on the US side of the things. Let's look at FTSE. FTSE's pushing up towards some decent levels. This is the weekly chart. We've broken above the 69.60 level, clearly trading above there on a weekly basis as well. So that's positive. We've got resistance up above coming in at. Obviously, we've got the 7,000 level we've just pushed through. That's a key psychological level. We've got the 78.6 fib retracement level coming in at 70.63. So that's one to watch. And also this upward trending resistance line in this wedge formation that comes in at 71.62. So plenty of room on the upside. Momentum's good. On the 4-hour chart, stalling a little bit. So maybe a little bit of a pullback, but I'd rely on this Ichimoku cloud. This looks pretty decent for me in terms of sticking with the trend. We've got this great trend line here. Again, we'll extend that out and can see that provides decent support, even if we were to get a break of that cloud. On the DAX, we've broken out of this flag formation that we highlighted earlier in the week. And this looks pretty positive. We're going to take out the all-time high, 15,365. We're only 20 points away from it. No, that must be it. 50,371. So we're only sort of like just under 30 points away from it, and we've got great momentum going into the day. I expect to see some resistance come in here at the all-time high. Obviously, might poke our head through it and then retrace somewhat. But again, buying dips for me is the way to go with the indices. Boring old Dow grinding higher, ever higher. No sign of it stopping. All-time high there, 34,072 currently, just trading 30 ticks lower than that. NASDAQ back up to its all-time highs and just correcting lower over the overnight session. So again, really looking to maybe buy dips around about 13,850 down to 13,775, and we've got the Ichimoku cloud again providing good support here. This could be an interesting level if we get down to there, 13,665. For me, again, that would be a level if tested and we get the bounce, go with it. If it breaks, there could be a little bit of a vacuum move downwards, down maybe towards 30,300. S&P continuing higher, no sign really of slowing. Oh, we got this, the momentum, the MACD is grinding lower. So there is a lot of bearish divergence. So we just have to sort of like always be aware that I feel these indices are having good momentum, good reasons to stay with it. No real reason to get out of it, but it's a bubble in my opinion, and it will pop. And when it does pop, it will pop big time. So just be very aware of that. Any sort of reversal formations for me, I love them sort of things, especially in indices, and I'll be looking to get my bear suit on when that happens. But it
Just
will
a little
happen very
stat for you,
fast.
Steve. Over the past 5 months, more money has poured into equity markets in the last in the last 5 months than in the last 12 years combined.
Now that is a real worry for me. That is even more so.
That's
I mean,
according
just
to
think
global
about them
equity fund
numbers.
inflows.
Just think about them numbers. I mean, it's basically the money's got nowhere else to go.
Yeah.
I mean, you can't stick it in bonds. You know, some bonds it's costing you money to sort of hold. So cash is definitely not king at the moment. There's a lot sloshing about because obviously, you know, the central banks have just added another naught to their balance sheets, and sort of like all of a sudden they got a lot more money or fake money. But you know, these there will come a time when this has to sort of capitulate.
That
So
is mental, isn't it? Past 5 months, more money in than in the total of the last 12 years combined.
that's frightening. So yeah, I we'll see. You know, it won't be a nice thing to say. You know, I told you so, and even me telling you so doesn't really help in day-to-day investment or day-to-day ideas, because we're sort of like very much looking at the short-term pictures anyway. So but it will be a sort of like a big wipeout, and it won't be good for anyone. The catalyst, don't know.
No. Okay, right. Well, thanks very much for that update, Steve. Let's run on to the FX side of things. So this is the dollar index. Steve touched upon it earlier on in his analysis, but this is my take on it at the moment. At the moment, we are in a short-term downtrend. This is a daily chart, and we're into this level of support that I've drawn on the chart, a band of support between what is it, 91.37 to 91.65, so 30 tick-ish range. We found some support yesterday. Although there's some early selling, we sort of clawed it back. But if you look at what's going on today, selling has resumed after a bit of an attempt at moving higher. So I think while we're in this corrective channel, there is scope for lower prices. If this channel breaks to the upside, then we may see a continuation higher in the dollar index, and that given where we are in the short-term picture, we may see that continue up to sort of 94.46. But that kind of is on the flip side to what we're seeing on things like gold, which is looking increasingly bullish. And obviously there's a flip side relationship to gold and dollar index. If gold's pushing higher, typically you'd expect a weaker dollar, but not always the case, but more often than not it is. If we look at euro dollar, that's interesting as well, because it's, like dollar index, it's at a key level. So we've got resistance here at 119.92, which is being probed today. If it breaks above that, then we may see a continuation higher in euro dollar after a bounce from this sort of just in front of this band of support that we've got, or this 38.2% fib at 116.95. This is the daily chart, and I'm just wondering whether or not something is building here in the sense of a top pattern, maybe. So I'm not sort of fully behind, being bullish on that yet. I think what may change my mind is if we get some sort of channel form here and it breaks out of that. I'll just go back to that high. I think if we can get above there, then maybe it would be a flag type pattern, and a continuation high would be seen. But keeping an eye on that for now. Cable, that didn't do an awful lot yesterday. Sort of had 4 days of rallying, but stalled in yesterday's session, and we're seeing a bit of a sell-off today of about 0.2%. Key support here between 136.42 to 136.70. If these levels break down, then I think we can start targeting a deeper move down to this 134.58 level. If we look at New Zealand dollar, that had a really good move over the last couple of days, a sort of a shift back to riskier currencies, if you like, and we saw it on the Aussie as well. So that's been pushing higher following the break of this big wedge that I've got that goes back to March. So whether or not we see any stalling in and around here, we'll have to wait and see. I'm still not sure I want to be owning those really, so I think I'm still looking for opportunities to sell into rallies, probably well below this 72.70 level. Dollar CAD, nothing going on here, still waiting for this break of wedge if it is ever to occur. Looking for a break of 126.47 to confirm that, and then we can maybe start targeting higher levels on that. And if we look at dollar yen, as we've touched upon a few times recently, there's a big break of this trend, which goes back to 2015, this blue line here, and I was looking for a bit of a retest of that for maybe a continuation higher. In the red on that at the moment as an idea, but maybe some support being found today. So we'll have to wait and see how that plays out. Pretty much rounds it up for me on the FX side of things for now. We'll take a fresh look next week.
Okay.
Gun to the head yesterday, Steve. Reason to cheer. We've got a couple of winners.
Winner, chicken dinner. Well, if you throw enough shite at the wall, some of it sticks, mate.
And indeed it does. So what we got?
It has been shite recently as well.
Yeah, so we had a Nasdaq trade, 1.17R, 137 ticks at the close, and you went long of copper for a 1.71R on that one. So nicely done, Steve.
Very pleasant.
We'll take those and we'll move on. Not really done much for the overall P&L. We're still in this sort of grind lower. Hopefully this isn't just a case of selling rallies, and we can actually string together a bit of form. Anything you fancy this morning?
Yeah, I do. I fancy this. If I look at the dollar over the last 4 hours, we had this hanging man candle either side of a bullish candle and a bearish candle. So that for me, that's pretty negative. That's like a evening star type formation. So good potential. I think we still got a little bit of a way to go before we hit support down at 91.40, and that's a real test of it. Bottom of the channel and horizontal support. So I think it's got good momentum in there. So potentially that could lead to gold moving higher. Now I'm going to be really aggressive with this gold. I would, as I've just said, I'm happy to buy down at the 15.45 to 55 level, but as there's a gun to my head, I've got to buy it now. So getting long at 17.64, and my stop, I'm going to keep an ultra tight stop, 17.64.06, and I'm going to do 17.59.06, which is below the this little bullish hammer type candle we've got from 2 o'clock to 6 o'clock this morning's 4-hour chart. So targets on the upside. Yeah, I mean 17. What about 17.79.06? What does that give us? Oh, where's that gone? No, not in there. 17.79.06 in there. Yeah, that's a 3-to-1 risk reward. I'll be happy with that. Yeah, let's see how that one works. 3-to-1 risk reward, buying it here, stop, really tight stop, 17.59.06, and targeting 17.79.06.
Lovely, good luck. I am struggling. I'm gonna have to go with dollar yen again.
Bill and Ben.
Yeah, so I mean, I know it's sort of opposite side to what you're doing today, but I just think that you know, the break of trend on the daily chart is pretty significant on dollar yen. So I'm going to keep banging this drum. So this was the trend line. This is a daily chart. This is back in 2015, and the price had been contained below that for a significant period of time until recently, when we saw a decent break up, and now arguably seeing a bit of a retest of that, potentially before a continuation higher, potentially. So we've put in some lows around here at 108.61. If we zoom into the intraday charts, this is the sort of correction back after the break, maybe in a little bit of a channel formation. Maybe we're forming some sort of rounding bottom here. There was a nice looking candle posted at 1 o'clock this morning. So I'm going to back it from here and going to target a move to the upper end of the channel, roughly, or in line with these, actually. So it's currently 108.85. I'm going to place a stop at 108.55 and target to move to 109.88, which would provide me with 3.5R if that were to be kind to me today.
Nice one. Good luck
We
with
will
that.
see.
Well, not so good luck. Well, hopefully it's like a yen move rather than a dollar move.
Yeah, let's hope so. Okay, so on to the news and what's expected today. We've got US housing starts and building permits at 1:30. We've then got at 3 o'clock the US consumer confidence, so Michigan consumer confidence figure. We've got Eurogroup talks as well going on today. Other than that, it's pretty quiet. What we've got on the earnings front, we've got Bank of New York Mellon and Morgan Stanley with numbers today. So more interest in the banking sector, and I guess they'll all be sort of singing the same song with regards to lending and the outlook for the banking sector. So unless there's anything else, Steve, we can wrap it up there.
No, that's all good, mate.
Cool. Well, have a great weekend, everybody, and hope you've had a successful week. We'll be back on Monday, and until then, trade safe.
Cheers. Good luck, everyone. Cheers.
Cheers. Bye.